Hi, all. Welcome back to another episode of the Adventures in Mobile Homes podcast. I'm your host, Rachel Hernandez, aka Mobile Home Girl of adventuresinmobilehomes.com. So today we're going to talk about all things real estate investing, real estate syndication with my guests here, Tara Scott and Brian Davis of Spark Rental. So let me go ahead and introduce y'all, and you can tell everyone a little bit about yourself and Spark Rental. Welcome, Tara and Brian, to the show.
Thank you.
Hi, glad to be here.
Great.
So yeah, quick introduction in 20 seconds or less. Spark Rental helps middle-class people build passive income from real estate, whether that's active rental property investing or passive investing in real estate syndications. We've got software, we've got calculators, we've got interactive maps, we've got online courses and webinars and live classes and all that good stuff. So that's the 30,000-foot view.
Great. And what's your real estate investing background, Brian?
So I've been in the industry for about 20 years. I started as a loan officer for a hard money lender back in the aughts. And, I was watching everyone get rich off of real estate at the time. And I was like, oh, I could do this. And of course, anybody could do it back then and make money until until the housing crash. And then that was, I had some painful lessons I learned from that. But yeah, so I bought a bunch of rental properties. Some of them ended up being quite costly lessons. Then I went on to manage an e-com company for a little while that serviced landlords and real estate investors. And oh man, I guess it was 6 or 7 years ago we launched Spark Rental. I guess 7 years ago at this point. Yeah, so that's in a nutshell. That's my real estate background.
Time flies. How about you, Tara? Tell us a little bit about you.
So I've pretty much had real estate around my whole life. Kind of the whole family kind of is into managing and investing, and I've learned a lot from them and went on, became a landlord myself. So did a lot of rental investing. Mainly up until had children, and I've been changing it up a little bit now, trying to do it a little bit more on the passive side. We did a little bit into lands. We do some stuff, we do some stocks, stuff like that. And in the midst now, syndications. So I'm doing a lot of passive investing. So that's me pretty much. And now I work for Spark Rental and connect with a lot of investors. So I'm talking to a lot of investors like on a daily basis. So
Great. Well, it's great to have you both here to talk all about real estate syndications. You're going to give me a lesson in real estate syndications. I always get a lot of people asking me these types of questions. Rachel, have you heard of this syndication or this or that? And so I thought it'd be a good idea to bring y'all on. So if y'all want to kind of tell everyone exactly what is a real estate syndication and what's involved as a real estate investor?
Sure. So real estate syndication is a commercial real estate deal that's private equity. It's all handled privately. None of it's publicly traded on stock markets. So you've got a commercial investor who wants to go out and buy, say, a $50 million property. They don't have $50 million lying around, of course. So they go and maybe they get 70% of that from a commercial lender. That still leaves them $15 million shy of what they need. So they go out and then they raise a big chunk of the rest of that from private passive investors, people like you and me, who just want to write a check, don't want any of the headaches of dealing with contractors or tenants or financing or any of the day-to-day management stuff. So passive investors like you and me can just wire in some money and become a fractional owner in these deals. That's a quick and dirty definition.
Okay. And what kinds of, what kind of packages or properties, because this is a mobile home investing podcast. Are there mobile home parks, self-storage? What is within that real estate syndication, or do they make the decision to buy it together, collectively?
Sure. Tara, take it away.
So everyone collectively does work on coming together and deciding on that deal, together as a group. So for us, we actually have our own thing that we do. We join up every month. We get together and we all decide on a deal. If you don't want to join in on that, you don't have to. But we kind of get the syndicator on, and I'm jumping a little bit forward, but we get the syndicator on, and he gives us a little bit of info about the deal, and then we get together and we decide, do you guys want to go ahead with this? And they have a chance to also ask questions, get an understanding of, you know, anything about that property that they want to. So yeah, everything's open. It's an open book.
Okay.
Does that
Yeah.
make
So
sense?
yeah, and so Rachel, as far as what types of properties you can invest in for syndications, it's really runs the gamut. So it could be multifamily properties, which are the bread and butter of real estate syndications, but it could also be mobile home parks. It could be self-storage facilities. It could be office buildings. It could be industrial properties. It could be oil and gas and other mineral resources. It could be timberland or agriculture. We've seen vineyard syndications for growing grapes and selling wine. So it really runs the gamut of any type of commercial real estate.
Great. So as a group, you all decide collectively if you want to move forward with, a deal that is presented by the syndicator. Can you tell me a little bit about who the syndicator is, and are they the person who is actually presenting the deal, or do they have any kind of affiliation with the properties? How does that work?
Yeah, so Tara alluded to our co-investing club where we pick and choose different syndications to propose to the club each month and vet those deals. But those are with different syndicators each time. We don't have any affiliation with any of those syndicators. So the syndicator or the sponsor, they will go out when they find a deal. They will typically invest some of their own money in the deal, and then they oversee the day-to-day operations of it. That's their role: lining up financing, raising funds from passive investors, overseeing the acquisition, the management of the property, and then eventually the sale of the property as well.
Okay. And how does this differ from crowdfunding, crowdsourcing, or a REIT? How is it different from that?
Sure. So publicly traded REITs, you can buy and sell instantly on public stock exchanges. So they're very liquid. They're also very volatile because they're very liquid. And they tend to have an uncomfortably close correlation with stock markets, which kind of defeats the purpose of diversification to getting away from stocks. So that's publicly traded REITs. Real estate crowdfunding can vary in the business model that they follow, and in some cases, they actually offer syndications. Now, when a real estate crowdfunding company does offer syndications, that is typically only for accredited investors, because you can only advertise publicly for a syndication to accredited investors if you only accept accredited investors. And if you're not familiar with that term, it's another term for wealthy investors who have a minimum net worth of $1 million or high income. Over 200 grand a year for single people, 300 grand a year for married couples. Anyway, just to get that out of the way. But some real estate crowdfunding platforms are open to middle class people. They might own pooled funds that own properties, from commercial properties, multifamily properties, single family rentals. They often own debt, so loans secured by real property. So they might own a big pooled fund that owns a whole bunch of different loans around the country. You can also invest directly in individual loans secured by real property. So for example, ground floor, they let you invest with as little as $10, put towards a hard money loan secured by a property. Fundrise is an example of a crowdfunding company that offers pooled funds that own a bunch of different assets. So you've got all kinds of different options out there for crowdfunding. It's very diverse. It's across the board.
Okay, great. And what kind of separates your group versus other groups? I did have a blogger friend who was also in something similar. They did apartment buildings too. So how does your group differ from other groups out there for Smart Global?
Yeah, so our mission with this, or at least with our co-investing club, is to help middle class people access real estate syndications, since historically they've really only been available to the wealthy. A lot of real estate syndications, like we mentioned a minute ago, are only available to accredited investors. So we go out and we find syndicators who do allow non-accredited investors, middle-class investors, to participate. So that's that's the first hurdle, right? Is just finding those sponsors and syndicators, and building a bit of a relationship with them. But even those sponsors who do allow non-accredited investors typically have a very high minimum investment, $50,000, $100,000. So even if you are allowed to participate as a middle-class person, that minimum is so high that it's hard for you to participate practically. So our co-investing club shrinks that down to $5,000 minimum per person per deal, which is a lot easier to manage than $50,000, $100,000. We all pool our funds together to split that high minimum investment.
Yeah, that was going to be my next question. How much does it take for someone, if someone wants to get into this? I have a lot of people who want to invest in maybe mobile home parks, self-storage, but they want to be more of a passive investor. That was my question. What is the minimum for someone to get into something like this if they do want to join the group? So
yeah, $5,000.
And that is the minimum, but you also, so in order to be somebody to get into, into this type of investing, you have to have some sort of education under your belt. You have to know about the real estate investing industry. So we offer a course, and the only way to really get into this group of ours is we want to get to know you. We also want you to take the course and educate yourself, and then has a little bit about, pretty much everything. It has crowdfunding, it has REITs, but it has a big portion of syndication. And it really takes it down to like step by step to really help you understand how it all works. But it's not so it's not like we don't just take people on into the club either. We like to get to know people, and we want them to be, educated, know what they're doing.
Sense. Yeah, that definitely makes sense. And so if anyone's interested in checking out this course, I'll put a link in the show notes if you just kind of want to check it out. The next question I had was, what types of returns? Because I know in real estate investing, you never know, obviously it depends on the market, management, all kinds of things. But what types of returns typically, if someone were to ask, if they got into something like this, do you think that, that they would get? And what span of time? What's the time period? What's the time frame here?
And that's a great thing, is the returns are really high, considering you're not hands-on investing, or you're not dealing with the tenants, you're not dealing with any of the repairs or any of that comes with it. But Brian's the numbers guy, so I'll let you take it.
So yeah, let me answer the second part of that question first. You had asked what's the timeline on these, and that is one of the drawbacks, is that it is a long-term commitment or a medium-term commitment of typically 2 to 5 years, sometimes longer. And these are not liquid at all. Once you're in, your money's pretty much locked up. So why would people do that? Why would people lock their money up for 2, 3, 4, 5 years at a time with no liquidity? Because the returns are often so high. You're typically looking at a minimum of 12% ish, up to over 100% annualized returns. So I know that sounds cartoonish, like crazy high returns, but I'll give you an example. There's a sponsor that we've worked with before, and actually we're in the middle of investing in a deal with them right now. Their name is Rise 48. Of the deals that they've gone full cycle with, their average annualized return that they've returned to investors is over 70%. So crazy high returns. But there's, like Tara said, there's no guarantee of these returns. I mean, sometimes you can lose money on these like any other investment, right?
Right.
So, you have to be careful in vetting these deals and vetting the sponsors, and in making sure you feel comfortable with the risk. But in general, what I like about real estate syndications is that you're looking at mid-range risk, moderate level risk with very high returns. So I'll take that spread between risk and return any day.
And
Gotcha,
like you said,
gotcha.
there's risk with anything, but what was I going to say? What I love about this is we take a new approach, and that's why we don't you don't hear about syndications much, because people are locking up their money, and they're locking up a lot of money. It's not, you know what I mean? Like, to be into this, a lot of times you have to put a good amount of money into that. So, what we've all been trying to work on is where's a way that we can, do it on a smaller scale, right?
Right,
So
right. And
pretty
there's so
incredible.
many groups out there, and whether it be REITs, crowdfunding, syndications. So if someone were to be interested in something like this, I mean, what would your advice be? I know you're big on education in terms of vetting, say they do want to join a certain group, what kinds of things should they look out for, in terms of doing their own due diligence of joining a group, of something like this?
Well, it's pretty much what I was saying before too. Sorry, Brian, I cut you off.
Oh, go ahead.
Um, we for us on our end of things, we like to get to know you. And we want them to, we want you to be educated. We want you to know what you're doing. And you really can't get into these deals unless you are, you have close relations with people, because that's how it works on this end of things. And Brian could probably talk further about that. But um, I think it goes both ways. Before you're jumping in, you take the course and you talk to each other and you get to know each other that way. So you do your own vetting, but you can. What do you think, Brian? What are your thoughts?
Yeah, well, so Rachel, it seemed like you were asking two questions there. One about vetting sponsors, vetting syndicators, and then you were also
Okay,
talking about vetting, potential investing clubs
group.
or
Mhm.
groups, of other people to invest
Right.
with. So vetting sponsors is really 90% of the game, as opposed to vetting individual deals by that sponsor. You want to work with people who have a very long established track record of success, people who have been around for a long time, and can prove it, can demonstrate it to you with their track record. People who aren't going to run off to a tropical island somewhere with all of your money, and who aren't going to mismanage the deals that you're investing in either. So we'll go into a deeper dive next week in our live class that we do on how to vet sponsors. But yeah, looking at their track record is first and foremost what you want to do when
Yeah, I
trying to
mean,
evaluate.
Danny and Brian got like a big stack of paper
Oh yeah, we have
for
like a
each
40 point,
syndicate
we have like a
syndicator.
40 question checklist that we go through with sponsors. But yeah, you want to see, what kind of deals do they do? Why, what's their investment thesis? Why are they operating in this particular market and, investing in this type of property? Are they planning on refinancing the property and returning some of your capital midway through and then holding the property long term? Are they planning on just doing a glorified flip where they renovate it and then sell it immediately? What's their investment strategy and why? Is the short version of that question, beyond just their track record.
Right. And this is the first I've heard, because I hear a lot about these groups, and, especially, if it's accredited investors and you have to have a certain amount. So this is the first that I've heard that you don't have to have that threshold. So it's all very interesting, because there are people who, they don't want to be so hands-on. I'm pretty hands-on with my business and mobile home investing, but there's a lot of people who don't want to be hands-on, but say they do want to get in on a deal, a commercial deal, mobile home park, self-storage, apartment building, whatnot. So this sounds all very interesting. I was going to ask, so how can people find out more about real estate syndications? How can they find you? You mentioned a class. If you could talk more about that.
Yeah, so we'll be hosting a class with you next Wednesday, which we are super excited about. And I assume you'll be putting the link in the show notes here so people can
Yes.
access that. But yeah, it's a free class. We'll walk step by step through exactly how syndications work, some of the tax benefits of investing in them, how to vet sponsors, how to vet deals, what are some of the pros and cons of syndications beyond what we've talked about today, because there are some challenges, and how to get around those challenges, how to surmount them. So
Yes, there will be a class and I will be hosting it. They will be presenting, both Brian and Tara, on real estate syndication. So if you're listening to this, it's going to be next Wednesday, February 1st at 1 p.m. Eastern time, I believe. So I will
Mhm.
put a link here in the show notes if you'd like to sign up for that class. And as Brian had stated, it is free. And if anyone would like to learn more about you, Brian and Tara, where can they find you, your website, social media, stuff like that?
Check out sparkrental.com, and then you can see Spark Rental on at Spark Rental for Facebook, Twitter, and Instagram. Um, we have a landlord hub if you wanted to check that out, and I can actually we can I don't, it's really long and I don't have a link, but I also wanted to reiterate here that if you guys can't join the webinar on February 1st at 1 p.m., we did give Rachel a link to the actual course. And on that affiliate link that we did give you, Rachel, there is a ton of information about the course and about syndications and how much the course is and stuff like that. So they can get some information on that and the co-investing club.
Yeah, all that good stuff. I'll put it in the show note to y'all. If you have any questions, feel free to let me
So if you
know.
can't if you can't make the webinar, check out that link.
Definitely, definitely. Yes, sometimes these things can be time sensitive. And as you said, both of y'all are very big on education. They are very big on education, more educating before moving forward on something that you don't even know anything about. So I appreciate that. Was there anything else you wanted to add besides the class, besides the course, for everyone today?
No, I just wanted to thank you for having us on. Like you mentioned, so many people say that they want to get into real estate, but what we have found is that what most people really want is just to diversify away from stocks and to add real estate to their portfolio. Most of them don't actually want to become landlords. So, there are plenty of ways to diversify your investments to include real estate without actually becoming a landlord if you're not interested in becoming one. So,
Yeah, and you'll all learn that through the class. And if you can't, there's the course as well too. So if there isn't anything else, check it out, y'all. I'll put it here in the show notes, sparkrental.com. Sign up for the free class that they will talk about real estate syndications, everything that we talked here. We'll do a deeper dive. I will be there. So if you want to see me again on camera, I will be there. They will be presenting. I will not be presenting. I will be the host. And if you can't make that class, check out the course. I'll put the link here in the show notes. But if that's it, without further ado, thank you so much, Brian. Thank you so much, Tara from sparkrental.com.
Thank you
for checking out and talking to us all about real estate syndications. This is Rachel Hernandez, aka Mobile Home Girl of the Adventures of Mobile Homes podcast. See y'all later. Bye.